Hello and welcome to this week's Compass Global Markets Financial Markets Update. Geopolitical uncertainty remains elevated after North Korea said it will be conducting more missile tests, and an all-out war could eventuate if the US took military action. The US has ordered another 2 military aircraft carriers to the Korean Peninsula as well. Now, the shift in US policy might signal a more interventionist attitude as well in the Middle East, escalating the risk of proxy wars in the region and thereby increasing uncertainty in markets. Who would have thought? But there's money in war. US defence stocks have outperformed the broader market, and we've seen President Trump as well increase or wanting to increase defence spending in the US by another 10% or $54 billion. Meanwhile, Trump's approval rating is back above 50% after having fallen to 36% last week before the bombing in Syria. The US dollar remains heavy, and after US Treasury Secretary in particular Steven Mnuchin made a comment on Friday night in the US that the timetable to get US tax reforms done by April, rather by August this year, is now completely unrealistic. So what we've seen straight away is an immediate reaction. Dollar yen has retraced from 108 to 109, and the Aussie dollar has strengthened a little bit on the back of the weaker US, and the Aussie dollar is now approaching 76 cents. He did also say, this is Steven Mnuchin, the US Treasury Secretary, he mentioned that having a stronger US dollar in the long run is a good thing. And now, the downside risk to the US we know will be exacerbated by news that the US budget is going to be in deficit. The last numbers we saw were a 3-year high because federal spending numbers had outweighed revenue by $176 billion in March. Now, the Aussie US may test higher this week. Look for that 76.40, 76.50 level to hold on the upside, supported by obviously the weaker US dollar, but more importantly encouraging Chinese economic figures. We've just seen China's economy grow by 6.9% annually in the first quarter of this year. That compares to 6.8% in the fourth quarter of last year. Now, the faster Chinese GDP growth numbers that we've seen will underpin commodity prices as well, such as iron ore, which, mind you, have fallen over 15% in the past week. And that could see a glut of iron ore enter the market later on this year, which could weaken the price of iron ore by another 20%. So even though we expect the Aussie dollar to test around 76.40-50 on the top side this week, the downside still remains vulnerable. Technical charts indicate that a move to 74.40 support level is still intact, and beyond that 71.60, which would keep the Reserve Bank of Australia quite happy. Now, let's not forget we had some very promising March jobs numbers in Australia last week. We've seen employment numbers really boisterous. Full-time jobs rose by 74,500. Part-time fell by about 14,000, but all in all the unemployment rate is steady at 5.9%. Now, the Reserve Bank's monetary policy minutes have been released. After leaving the cash rate at a record low of 1.5%, they continue to maintain their neutral monetary policy stance, but they are concerned about Australia's excessive household borrowing levels. Look, elsewhere, big news this week is the first round of the French elections begin this Sunday, leading to the 7th of May election runoff. Now, it's an interesting situation in France because that economy there has been quite sluggish now for a number of years. The state absorbs about 57% of GDP, and youth unemployment in France is above 25%. So the polls indicate that independent Emmanuel Macron, the former protege of President Francois Hollande, is favoured to become president. It's interesting that Hollande is so unpopular now in France that he's not even running for re-election. Macron's competitors will come from the far right and EU leader Marine Le Pen. The communist leader is Jean-Luc Mélenchon in third place, followed by the Republicans' François Fillon. So after the Brexit shock, and the election of Donald Trump in late 2016. The market is adamant that anything can happen with these French elections, and that will keep the euro on the back foot. So it provides an opportunity for Australian importers with euro payables to target the 72 level, Aussie Euro 72, this week for opportunities to take advantage of the market. Tony Boyajian, Compass Global Markets.